Hey guys, thanks for joining me on another video today. Remember, if you like my videos, please give me a thumbs up, subscribe to my channel, hit the little notification bell so that you're made aware of any future videos that we release. Today, we're going to talk about the Workers' Compensation Experience Rating Form, which you see here on our screen. This form is released by the WCIRB, the Workers' Compensation Insurance Rating Bureau of California. So we're going over the California document. This could be different than other states. So keep that in mind. If you have issues reading other states' forms, it could differ from this, although lots of the information is alike, so it could help you. And also remember, if you're having issues with your experience rating, if you think that something's incorrect, we do lots of work with experience ratings, not just for our clients at our insurance agency, but also we do consulting work for clients through 4C Advising, which is our complimentary company for experience rating, to do audits, to explain, and all that good stuff. So starting today, let's go over this rating, this Workers' Compensation Experience Rating Form, so you can you understand what's on here and what sections to look out for. So beginning in the top left, that's where your information or the company information will be listed. You can see here I placed it as a sample with a sample address, but right there you're going to see company information, and below it, those are the classifications with the exception of 8742 and 8810, which are salespeople outside and clerical office employees. The other classifications were assigned by the WCIRB. So looking at the classifications, you can see for this client, they have the 2 electrical class codes, 2 carpentry, the 2 wallboard, and the janitorial services 9008, which in this case is used for remediation work. You know, they do mold and water remediation. These are the class codes that were assigned by the WCIRB. In the top right section, above the table, you'll see the bureau number. Each company has a bureau ID number assigned. The effective date is going to be the effective date of the policy, and then the issue date is going to be the issue date that the modifier was issued. Now, in this case, you can see that the modifier is 110%. You might hear it as 1.10. What that means is that they're getting a 10% surcharge, with 100 being the median. They're getting a 10% surcharge on their work comp rates because of their rating or their experience. You can see that the bureau issued the modifier in June. Now that 110 won't take effect until the policy term of October 27th. So I want that to be clear. It doesn't take effect in the middle of a policy term. Sometimes there could be corrections made to experience modifiers, which if a correction is made for the current term, then that correction has to be endorsed on the current policy. We've seen that go either way. Sometimes it goes up, sometimes it goes down, but that's important to know. And then below that, you're going to see the carrier's information, the policy number, and the experience period. Now the experience period is going to differ from the policy period, and we'll explain that as we go down further and I show you how which policy periods come into play for this particular rating. A couple things to keep in mind here. A business could have different work comp carriers during the same policy period. For example, if a business enrolled in a RAP, or otherwise known as an OSIP or a SIP, controlled insurance program, outside of their regular work comp program, they could have additional data from other work comp carriers that will factor into their modifier. So that's really important to know. If you see different worksheets for the same policy period with different insurance carriers, that's the reason. Now let's go down to the section that shows all the data. The first thing I want you to notice in the top of the table, where it says summary of payroll and expected losses, then summary of claims and actual losses, to the right, there's a primary threshold. In this case, the primary threshold is $19,500. This is a really important number, and it's important information, and here's why. The primary threshold is the maximum primary loss value used in the calculation of the experience modification factor. Now, I want you to understand the primary threshold could change year to year. In fact, over the past few years, it has changed year to year. And what is the primary threshold? Well, it's the maximum primary loss used in the calculation. The primary threshold is determined based upon the total expected losses for the experience period. So that's important to note, that each year you could look at that, and when you're determining your calculations, that primary threshold is going to come into play. Now, right below that, below the headers, you can see insurer information, policy period. In the first case here, we're going to have policy period 1, that's used to determine this experience modifier for this particular client, 10/27/2022 to 10/27/2023. On the left of that, I X'd out, but each insurer has a 3-digit code. It's going to be listed there. Okay, so that's all your policy information. Right below that, you're going to see class codes. Again, you'll notice that a lot of the class codes listed here were also assigned by the WCIRB. However, in this particular case, there's additional class codes. There's 5606, which is executive supervision, and then 5201 and 5205, which are the concrete classes in California. Now, the client had these class codes on their policy. They reported in these class codes, but they were also picked up, and these numbers numbers are used from the final audit. Okay, so that's why performing a final audit on the work comp policy is so important, because WCIRB won't get the correct data from the carrier until the final audit is conducted and these numbers are shown. So you see all the class codes and then the payroll for this particular client. Now, if this is important, because if you go down a couple line items, policy period 10/27/2020 to 10/27/2021, okay, the majority of the payroll for this policy period was going to be in 2021. However, for the rating period factor, you remember back on the experience period in the top right, 1/27/2020 to 1/27/2023. So the payroll, the rate sheet shows the payroll by classification codes reported for policies beginning with the experience period. Okay, so payroll is associated with the year in which your policy began, not necessarily the year in which it was paid. So for example, in this case, for the policy that was effective from 10/27/2020 to 10/27/2021, the payroll is reported for 2020, even though most of the payroll was paid in 2021. So that's important to note, because experience rating periods could differ from policy rating periods. Now, next is the expected loss rate. Now, what does that mean? Well, it's expected loss rate per $100 of payroll. And these, again, the expected loss rates change from year to year, okay? They're subject to change yearly, and they're per classification code. The expected loss rate reflects the anticipated average costs of benefits per $100 of payroll for a classification during the experience period, okay? So in other words, let's look at class code. Let's look at 5403. That's the carpentry class, under threshold. This particular client had $734,000 of payroll there. Expected loss rate per 100 of 4.25. So in other words, for every $100 of payroll, the average cost of benefits resulting from workplace injuries assigned to class 5403 during the experience period was 4.25. That's important to know. So that's how you calculate expected losses. So if you take the payroll in that class code, divide it by 100 and multiply it by 4.25, that's how you come up with that expected loss. Here you'll see $31,204. Now next is the D ratio. What does the D ratio mean? That means the discount ratio. The discount ratio is the mechanism used to divide expected losses into primary and excess amounts. Okay, so I'll talk about expected primary losses here in a second, but the difference between the D ratio for each classification reflects differences in the severity of claims by classification. In other words, the severity of the average claim for some classifications is significantly higher, indicating a more severe injury, than that of the average claim found in other classes. There were over 90 different D ratios for each classification based upon the primary threshold. And the D ratio is also subject to change annually. So you can see the D ratio for the carpentry class that we spoke about. Okay, so 5403. So if you look down the list here, you can see the D ratios differ again per class code, and that's going to be based on severity of injury expected per class code and subject to change annually. Now, I talked about expected primary losses in this section. So what does that mean? Well, you'll see the numbers listed to the right of the D ratio, and the expected primary losses are determined by multiplying the expected losses for a classification by the D ratio for each classification. As I said, there are over 90 different D ratios for each classification based upon the primary threshold. So primary expected losses are totaled for all classifications, and the difference between the total expected loss and the primary expected loss is the expected excess losses, which is in your column next to the right. We got past that part, right? We got past of the summary of payroll and expected losses. Now let's move on to summary of claims and actual losses. Okay, so this is the actual claims that were reported for this client. And again, if auditing a work comp modification factor, it's important to gather all of the data from the carriers that would have been reported. So for example, going back in that column to the left of the summary of payroll, I talked about audits, gathering and ensuring that you have the data from the final audit, not from the declaration page of the policy, not from what they've reported during the policy year, the final audit. Same goes for summary of claims and actual losses. What is reported on the loss runs? Okay, does this information match what's on the loss reports? Was the data presented or reported properly? So you can see here on the right, this is the actual data from the carrier and what was reported by the insured. Claim number, that's pretty self-explanatory, right? But it helps when you're auditing a modifier so that you can match up the claim number on the loss report with the claim number that's here on the experience modification report, or the experience rating form, I should call it. Next is the injury type. Now, injury types they're coded. Okay, so they're coded based on a number here. So you'll see the injury type, and the injury types are listed by a code. You see here 0605. 06 being a medical only claim, 05 being temporary total or temporary partial disability. And because of that, you could see on a medical only claim, closed, those are pretty quick. They're handled well, efficiently. Not a lot paid out, smaller claims, so they don't have as much of an impact on the experience rating. Whereas you could see a temporary total or temporary partial disability claim, we call those lost time claims or indemnity claims. You can see open, they take longer to resolve. You can see the actual losses and the actual primary losses start to grow. So that's why we talk about in other situations with our clients or in other videos here or blogs or anything that we try to help clients with, getting people back to work is really, really important. Now, other types of injury types: death, permanent total disability, major permanent partial disability, minor permanent partial disability, temporary total or temporary partial disability, like I talked about, medical only, contract medical or hospital allowances, and then compromised deaths or quote unquote an S claim. So here on this report, if you look all the way down, you'll see there's only the two types of claims, even in the year before. So those are the two types of claims that were presented for this client. Now you can understand what open and closed claims means. That's pretty self-explanatory, but let's talk about actual losses and actual primary. So actual losses shows the total claims value, medical indemnity, as of the loss valuation date. Okay. Now the actual primary losses, this is the total amount of the claim value up to the primary threshold. That's the actual primary loss. Any remaining amount is excess. In the third claim here, that's a larger one, that's open, $69,816. $19,250 is primary. Okay. Then the remaining is considered excess. So that's going to all factor into the calculation of this person's 110 experience modification factor. The same goes now the next two policy periods. So an experience rating factor is going to be based on the 3 policy periods before the current term. Okay. So what does that mean? The current term is going to be 10/27/2024. That's the effective date of this rating factor, 10/27/2024. So they take into consideration the 2022-2023 term, 2021-2022, 2020-2021. You'll see 2023-2024 is not yet included here. Now on the 10/27/2025 rating factor, 10/27/2020 to 2021, as you see on the bottom of this form, is going to drop off, and then 2023-2024 is going to be added in. So as you can tell, they're dropping off a clean year. You'll see that year was clean. They had no losses. 2021-2022, they have 1 open claim and 2 closed claims, 2 temporary or partial disability, and then 1 medical only. So they're going to add the year, their current year, and the history in their current year, their experience of 2023-2024 is going to have an impact on their 10/27/2025 factor because they're losing a clean year. So hopefully this year is clean also, the current year that we're in. Now, if you go to the very bottom, I don't want to talk again about all this because I already talked about what this data is, but at the bottom is where you'll see how the experience totals. So you have expected losses, expected primary losses, and expected excess losses, the number of claims, the actual losses, and the actual primary losses. That's all the information that is used to determine what this person's experience modification is. And down at the bottom here, you can see how it's calculated. Okay, so it's the actual primary losses plus the expected excess losses divided into the expected losses equals the 110%. Now you can see something below that says loss-free rating. What does that mean? So loss-free rating is the experience modification that would have been calculated if 0 actual losses were incurred during the experience period. So that means that this particular client had the ability to have a 0.68 modifier, which if you talk about it in discounts, that would be a 32% discount from 100, 100 minus 68, you're going down 32 points on their experience, on their work comp rates versus a 110. So that's a 42% swing. So that shows you how important it is to have clean work comp experience. Then after that is just some information about what the Bureau presents about how they calculate their modifier. So that explains the Workers' Compensation Insurance Modification Form of California, the WCIRB. Looks complicated. It is, but then again, when you do it all the time like we do, it's not as much. It's just a lot of numbers and a lot of data. But the key is to make sure that the data is proper, right? And we talk about that with experience modification audits, experience modification analysis that we do here at the agency. And if that's something that you want help with to ensure that your modifier is correct, give us a call, reach out. You can email me directly at mike@foagency.com. You can comment on our YouTube video with any questions or concerns you might have. We reply to all of them. You can give us a call at 858-384-1506, or you can fill out the form at the bottom of our blog, and we will gladly reach out and help you with your experience modification factor, your work comp policy, or anything you need, safety, loss control, any services you need surrounding this very important topic, because experience modification factors directly impact the amount of money that you spend on your workers' compensation policy. Thanks again for watching. Remember, give me a thumbs up if you like my video, subscribe, hit the little notification bell so that you're made aware of any videos that we release in the future. Hope to see you on another one very soon. Take care.